Well, I mean, first of all, there was a bubble before Trump was elected. I mean, clearly, and Trump pointed that out himself. I mean, that was one of his talking points on his stump speeches. There was a big, fat, ugly bubble in the stock market. And if Trump wants to take credit for the bubble getting bigger, I would agree. I think that there has been a lot of optimism, a lot of enthusiasm among investors, and that has resulted in higher stock prices. But I think where Trump is getting into trouble is by claiming that the stock market going up is no longer a bubble, that now this is just a real bull market that reflects the improvement of the fundamentals since he's been elected. That's not the case. This is simply more air into the same bubble. And this bubble is going to burst. And I think, unfortunately, now that Trump has branded it, just like it was one of his buildings, he's put the big, Trump marker on it. When this thing pops, he's going to have to take the blame.
Now, when you look at the corporations that make up the stock market, especially the FANG stocks, we know that the Swiss central bank, they've been buying a lot of these tech stocks. I mean, are the earnings, the revenue, does it make sense that the stock market should be moving up the way it is?
No. Well, I mean, it shouldn't have been moving up before. I mean, but it's a bubble. I mean, people are buying stocks. And, as long as more people are buying than selling, or the buyers are more, aggressive than the sellers, I mean, prices can keep going up. But we do know that eventually the process reverses. I mean, the bubble can only get so big. Eventually it finds a pin. The Federal Reserve has managed to inflate three bubbles, since 2000 or since the late 1990s. The first one popped in 2001. The next one popped in 2008, and we don't know when this one is going to pop, but it will. I think this is the biggest bubble the Fed has ever inflated, and so it's going to meet the same fate as the others. And if not, it's only because the dollar completely implodes, because the government decides that that this bubble is too big to pop, and so they are just going to keep printing as much money as possible to prevent it, and so the dollar ends up collapsing instead.
So we see the stock market, as we've been discussing, going up, and unemployment since the mid 2013, 2014, it started to decline, and in January of this year, it started to really decline. I think, what is it, like 4.1% or something like that? I mean, does it make any sense for the unemployment numbers to continually decline right now? Or are we really creating new and better jobs, full-time jobs?
No, I mean, this trend, again, this is a trend that has been going on for a long time. And again, this is something that Donald Trump rightly criticized when he was a candidate for president. He talked about the phony unemployment numbers. He said it was the biggest fraud going. It was a complete con. The unemployment rate was much, much higher, 20, 30, 40, 50%. I mean, he was throwing out these huge numbers. And of course, all that's happened since Trump has been elected is that those same trends of falling unemployment that we experienced under Obama have continued under Trump. The only difference is now Trump brags about how low the unemployment is, and he takes credit for it. But, the reality is the unemployment rate is falling mainly because the workforce is shrinking. The number of Americans who are part of the workforce continues to fall. In fact, the most recent jobs report that we got, I think it was October, almost 1 million people left the labor force. It was the third largest monthly exodus from the labor force ever. Had nothing to do with the hurricanes, because the hurricanes were already over. And Puerto Rico isn't even included in these numbers. And the other reason that the unemployment rate is so low is because all these part-time jobs, count as jobs. So people who have taken on part-time employment because they can't survive on their current job, or maybe they were not working and they were retired, and they take a part-time job. So now these people are considered employed. And even if you have one part-time job and you're still looking for another one, you're not considered unemployed. And that's the case for a lot of Americans today. They don't have real jobs. They have a part-time job. They're still looking for a real job. But the minute you accept any employment, even if it's 1 hour a week, you're no longer considered unemployed, even though, for all practical purposes, you are unemployed. So it's more a quirk of the way we keep track of the statistics. It is not, really endemic of a strong labor market. And, I think what is really more revealing is the fact that the labor force continues to shrink, and, younger and younger people keep leaving the labor force. I mean, the story is that, the labor force participation is shrinking because people are retiring. The baby boom is entering the retiring years. And the truth is that older workers, the labor force participation rates there are actually rising. Yeah, where you're seeing this big drop in people working is people in their 20s and 30s. And this is not a very healthy thing, that so many young Americans are just not even a part of the labor force. And therefore they're not unemployed, but they're not working.
So why is the older generation, why is that rising right now with people who are maybe retiring? Why is these individuals getting jobs?
Well, because they don't have the retirement savings to really make retirement impossible. Right? They didn't save enough when they were still working. And to the extent that they did save, the Fed has kept interest rates so low that they really can't earn any type of interest on their savings. Meanwhile, the cost of living, despite the government's claim that there's no inflation, the cost of living has been steadily rising. Particularly if you look at the costs of food and medical care and rent and insurance and, things that retired people buy, on a, just weekly, monthly, these costs have been going up. And, they don't have the means to pay. So a lot of people end up taking part-time jobs to fill in the gap in their income, between what they get on Social Security or what they had from retirement. It's just not adequate. And so more and more, older people are taking these part-time jobs.
Now, I mean, they're continually telling us that, the job market is great. But when we look at retail, and this is a lot of part-time jobs in retail, we see retail, it's imploding on itself. I mean, Sears, JCPenney, Mattel came out saying that their earnings, revenue is not great. The sales of certain toys, not that great. Limited and many other businesses, they've gone bankrupt. Stores are closing. I see it around my town where different stores are shutting down. I mean, if all these stores are shutting down and we're losing these part-time positions, how are we adding to the job market while retail is struggling?
Yeah, again, a lot of times when people used to have a full-time job and now they get two part-time jobs instead, the two part-time jobs count as two jobs, even though they're part-time. So we can totally be losing jobs. But if we end up creating more part-time jobs than the full-time jobs that get lost, statistically speaking, there's an addition of jobs, even though, people are working fewer hours. But yeah, I mean, you look at what's happening in retail, especially, brick and mortar, companies are imploding. But interestingly enough, 1/3 of all the jobs created in October from the government's jobs report, 1/3 of them were waiters and bartenders. And, we already have record numbers of waiters and bartenders. And I think one of the reasons that we have so many people employed as waiters and bartenders is not that we have so many more waiters and bartenders. It's just that all the jobs are now part-time. So, many of these waiters are employed 3 times, right? So I'm working 3 times as a waiter. That counts as 3 jobs. If I have 3 15-hour gigs that I have, and so I've hobbled together a 45-hour week, I'm one waiter working 3 jobs. But the way the government reports it, it's like there's 3 waiter jobs there. So you would think there's 3 people working as waiters. There's only 1 person working as a waiter for 3 different employers. And this is a function of the way the workforce has changed in the wake of Obamacare, because Obamacare has imposed this requirement to provide insurance on workers who work more than 30 hours a week. So the way to get around it is to make sure that you employ people that work fewer than 30 hours. So that means that people have to have multiple employers in order to get around that requirement.
So do you think the retail, even the food and service industry, I noticed the restaurant performance index is continually declining, where they're saying foot traffic is drying up. And it makes, to me, when I think about, people working in the food industry, it makes no sense that they're adding more individuals in the food industry if the foot traffic in restaurants is declining. At the same time, retail is declining. I mean, coming into this holiday season, do you think retail is really going to take a hit this year?
Yeah, I mean, it's been taking a hit. It took a hit last year. I mean, look, Americans are broke and so they can't spend as much. And when they are spending, they're trying to spend as wisely as possible. And so people are shopping more and more online. They're buying stuff on Amazon because they can save a little money. And so that makes it harder and harder for the brick and mortar guys that have higher overhead and that are actually trying to make a profit. Amazon doesn't care if it sells products at a profit. But your average retailer, doesn't have that luxury. He's got to make a profit because he's got to pay his rent and he's got to pay his employees and there's got to be something left over for him. So it is going to get harder and harder. And, intuitively, you would think, looking at the reports, I mean, people are eating out less often now because either, they're not employed. One of the reasons that a lot of times you eat in a restaurant is because you're at work. And so you go to a restaurant during your lunch break. But if you're not in the labor force, if you're just at home, you don't have to go out to have lunch. You could just have lunch at home. And then, of course, sometimes people would go out to dinner. But if you don't have the resources, if you're struggling living paycheck to paycheck, people aren't going out as often to restaurants. And more people who do have jobs are bringing their lunch to work in a brown paper bag. So this is going on. And you would think, why aren't retailers laying off more workers? And I think they are. You just can't see it because they're hiring so many part-time people, that is overwhelming the full-time jobs that are being lost. But at some point, I think even these part-time jobs are going to be lost. And a lot of these restaurants now, especially fast food, given the big push to increase the minimum wage, they are going to be investing very heavily in automation, trying to eliminate as many jobs as possible and replace them with computers or machines or things like that. And so that is eventually going to really accelerate the substitution, especially as the cost of the computers and the robots comes down, which it will. I mean, we know that when they invent things quickly, they can make them better, faster, and cheaper. And so that is just going to accelerate the switch from human labor to machines. And, at some point, maybe 10 years from now, there will be very few people working in fast food restaurants, if any people working in those restaurants. So those jobs are all going to be gone. So the people who are protesting, demanding $15 an hour, I mean, they won't have to protest anymore because they won't have jobs. And so, then the employers won't look like the bad guys because nobody will be able to say that they're paying low wages because they'll say, look, we're not paying any wages. Don't get mad at us for paying low wages. We stopped that. We got rid of all those low wage employees. So you can be happy now that, we're no longer exploiting people.
I wanted to move on to housing. Back in 2006, 2007, you forecasted that housing was in a bubble and it was going to burst. And actually, that's exactly what happened. Here we are today, and in some of the cities, we're seeing the bubbles, well, they're larger than they were back in 2008. Do you see the same thing happening in the housing market today that happened back in 2007, 2008?
Well, it's not the same thing. It's history doesn't always repeat, but it rhymes. I mean, back in 2008, right, that was the era where individuals were just buying all kinds of houses and, zero down, liar's loans, teaser rates on arms. I mean, everybody was getting in on it, right? I mean, so that is not the situation today, right? You don't have the crazy speculation from the individual buyer. You don't have the school teacher married to a fireman, lying about their income and buying 3 houses and, believing they're just going to get rich. And we don't have all the home equity extractions going on year after year where people are using their homes as an ATM. So that's really not going on to that extent. I mean, it's going on, but to a much smaller degree than it was back then. But what is happening is you had a lot of institutional investors buy houses with all cash, with the idea that they would rent them out. So you do have a lot of hedge funds and private equity funds that have loaded up on huge portfolios of single-family homes. And I think they have competed with one another to bid up prices. So I think that you still have a situation where real estate remains very overvalued and unaffordable for the majority of Americans. And what has been propping it up has been the artificially low interest rates that have, enabled these transactions to make sense. In a low interest rate environment, if they can buy out a house and rent it out, and even if they can get a 2 or 3% positive rate of return on the rent, I guess it still made sense. And the hedge funds still believe that the houses could appreciate. But eventually, when interest rates rise, and so too will property taxes and maintenance costs and vacancy rates, I think a lot of these institutional holders of single-family homes are going to realize that these investments are no longer cash flowing. They may be a big drain on their cash flow. And I think a lot of these houses are going to come up for sale. And of course, there are no buyers, right? When the speculators want to get out of the housing market and the only buyer is somebody who actually can afford to buy and live as an owner-occupied, housing unit, prices are going to have to implode. I mean, prices are so high, people can't afford them, even with these ridiculously low interest rates. But if in a higher interest rate environment where, mortgage money is 8%, 9%, 10%, which was the average for many, many decades, and people have to put down payments too. I mean, if we go back to the days where you need a 20% down payment, I mean, imagine how low prices would have to fall for the average American to be able to come up with 20% down. And of course, what they're even talking about doing now in either the House or the Senate, proposed tax changes, this will also hurt housing prices, because what these bills are going to do is they are going to either, remove some of the tax breaks associated with buying a home, or they will make it so a large number of home buyers wouldn't even qualify for the tax break anyway. And so part of the value of a home, when people go out and buy a house, embedded in the price of the house is the present value of their tax savings. The fact that houses were also tax shelters, that tax shelter was a component of the value of the house. Just like, does the house have a enclosed garage? Does it have a swimming pool? What are the bathrooms? I mean, the tax credits were part of the value that you bought when you bought the house. So to the extent that the tax deductions are no longer there, then real estate prices have to fall to make up for the fact that the buyer no longer gets those tax breaks. And so that can knock 10 to 15% off of home values, which could be a big deal. I mean, it's good if you're a buyer, right? Now you get to buy the house cheaper, but it's not good if you already own the house and that was your home equity. And it's not good if you're a bank and you loaned money to the guy who owns the house and now he doesn't want to repay the loan. And now you've got to sell it, and the pool of buyers no longer gets the tax break, and so they're not able to pay as much for the house. So that's another thing that can help bring down housing values. So we could certainly see, a precipitous decline again in residential real estate in the United States.
Yeah, and it sounds like it's, if this all happens, this is like a perfect storm, because those people that never recovered, who are still underwater, where their prices, where the price of their house never reached where it was prior to 2008, they're not going to make out in this type of situation. And the people that purchase the homes today at the higher prices and they fall, I can see the whole thing just imploding and collapsing on itself. And this will affect other industries, not just housing, if this does happen.
Yeah, obviously too, if Americans lose their home equity, that's their main asset. Although home ownership is already down there a 60-year low, so a lot of Americans already have no homes anyway. But yeah, you're going to see more people. But yeah, there's a lot of occupations rather that are byproducts of the housing market, and so yeah, it's going to have ripple effects throughout the economy to the extent that you have a big slowdown in housing, you have a big slowdown in home construction. That's really going to take a hit. Obviously, building is going to stop for new homes, and so there's obviously a lot of jobs that are going to be lost there. and those are some higher paying type jobs, construction jobs. So yeah, I mean, there's a lot of reasons that we're headed for a recession. The problems in housing are just one of them.
So I wanted to move on to gold. Just in the last week, gold was slammed down with like 10,000 contracts and 38 contracts. Do you still see gold being manipulated? Or is this normal to have so many contracts thrown? And I know it's paper contracts, but is this normal to have these type of paper contracts thrown at gold? I mean, what would be the reason someone would want to do this?
Well, obviously there are people that come into the gold market and they just dump huge, amounts of contracts. They sell, and they sell in a way where they just dump it all very quickly. So it's obvious that the goal of the sell order is to knock the price down. See, if somebody was just legitimately trying to sell, their goal would be to sell at the highest possible price. They wouldn't want to impact the market, because you're trying to get the maximum from just the gold that you're selling. So if somebody was a legitimate seller, just motivated by, hey, I like the price of gold right now, I want to sell some, they would sell very slowly. They would try not to affect the market. They would try to allow the market to rise so they can sell into the strength and get a better price. But when somebody just dumps a bunch of gold on the market and it immediately drops the price and they sell at a much lower price than the price they would have got if they were just quiet about it, then you got to realize that their motivation is not to get a good price. Their motivation is knock the price down. Now, why would somebody want to deliberately knock the price of gold down? Well, maybe they have options, that they wrote call options, and maybe it's getting near an expiration, or, maybe they shorted some gold stocks. I don't know. There could be reasons that people want to knock the price of gold down. Of course, the conspiracy type theory is that, they want to keep it suppressed so people don't realize what's going on, right? They don't want it to break out and, expose the whole scam that's going on with the fiat monetary system. But whatever it is, eventually the real buyers are going to overwhelm whoever's been selling gold, and the powers that be, to the extent that there are powers that be, or if it's just individual speculators, big banks, doing things that are in their own self-interest based on their other positions. Eventually the market's just going to overwhelm that, and it's going to go up, and the gold market's going to skyrocket. I mean, gold is undervalued, no question in my mind that it is. And you can look at what's happening with these cryptocurrencies. I mean, clearly people are looking for alternatives to the fiat monetary system. I think the people who have jumped into the crypto space, have really got out of the frying pan into the fire. But I think a lot of these cryptocurrencies ultimately are just a bridge back to gold, which is where people should have been all along. I think gold actually does the majority of what people were hoping to find out of cryptocurrencies, especially when you combine gold with the internet. You have a company like Gold Money, where I would suggest your listeners open up an account. But a company like Gold Money at, goldmoney.com basically allows you to use your gold the way anybody else would use their Bitcoin or, any other cryptocurrency. You can use it as a medium of exchange. You can use it as a store of value. You can earn it. You can spend it. You can hold it. I can transfer gold anywhere in the world for free. I can use my gold that I own through Gold Money to buy a pack of chewing gum, or to buy, a flat screen TV, or to buy a house. I can buy, a tiny fraction of a gram, or I can, spend ounces of gold, very easily. So I think that Gold Money ultimately is the answer to the problem that the cryptocurrencies are hoping to solve but can't. So yeah, goldmoney.com would be, I would recommend certainly that people, and they actually too, they own my gold company, SCHIFF Gold, is now part of Gold Money.
I wanted to talk about the pensions, the private pensions in America, because Senator Brown, who's a Democrat in Ohio, he's going to introduce legislation that will allow struggling multi-employer pension funds to borrow from the U.S. Treasury to remain solvent. This seems to be very, very scary, because it sounds like they know there's a pension problem in America.
Right. Plus, where does the U.S. Treasury get the money? It borrows it too from Japan or, China, or the Federal Reserve, which just prints it. So it's just one insolvent entity, borrowing from another insolvent entity. So, eventually, the credit of the U.S. Treasury is going to implode. I mean, we're going to have a sovereign debt crisis. That's where we're headed, right? A currency crisis and a sovereign debt crisis. But, when the government is trying to backstop, somebody, this is just one big Ponzi scheme.
Now, you think they understand that, that the whole entire pension system is going to collapse and they're trying to stop it from collapsing before it actually happens? Because I can't believe there's people in government, you see this bill, that they don't realize that we have major problems in the economy. Because if they thought everything was fine, they wouldn't come up with a bill like this. So
yeah, well, there's all sorts. They actually have provisions now where, if the Federal Reserve loses a bunch of money, that the Treasury has to bail out the Federal Reserve. They've already positioned for massive losses at the Fed on their mortgage-backed securities, and the same thing with Fannie Mae and Freddie Mac. Where they've been sending profit checks to the government, but eventually, in this next housing downturn, they're going to lose hundreds of billions of dollars all over again. So they've already have all these contingencies and bailouts in place, but there's no real ability to bail anybody out if all these things actually happen. How is the Treasury going to bail out the Fed? Where are they going to, how are they they're going to raise taxes to bail out the Fed? It's not, it's not possible.
So the central banks, the ECB they're continuing the stimulus into 2018. The Fed is keeping, everything steady as she goes right now. They're not raising interest rates. They're, slowly unwinding their balance sheet. Are they backed into a corner? They're
not slowly unwinding their balance sheet. They talked about slowly unwinding the balance sheet, but the balance sheet hasn't unwound at all. It's right as high as it's ever been. I think this is all a bunch of talk. There's no way they're going to be able to shrink that balance sheet in any significant way, because it would drive interest rates up and, weaken the economy and, affect asset prices. In fact, I think the next major move in the Fed's balance sheet is another big leg up when they have to launch the next round of quantitative easing. Obviously, the U.S. economy is going to go back in recession. I think we probably would already be in recession had Trump not won the election. And I do think that the enthusiasm surrounding his victory and the optimism, I think, probably postponed the recession for a year or two. But it's going to hit. And then, how is the Fed going to respond? Well, we know. In fact, Donald Trump has appointed a new Fed chairman to follow Janet Yellen that he's confident will do exactly what she did, or exactly what Bernanke did, which is, slash interest rates and print more money and buy government bonds and buy mortgages or buy whatever they have to buy to keep everything from imploding.
Do you think we're going to see some type of economic crisis in 2018?
Well, I do think we're going to see a downturn. We could see a crisis, but chances are the crisis itself will happen later. I think the dollar is going to continue to fall. And I do think that initially, the falling dollar will be greeted as a positive, right? Oh, this is great. It helps the multinationals. It's good for employment or whatever. But I think it's going to start out as a decline and turn into a rout. And that's when we'll have a crisis. But we'll see, if the Democrats, take the House and the Senate, or the Senate or both in 2018, that could be a wake-up call, because, the markets have been built up on all kinds of expectations of deregulation and tax cuts. And that might get people to start to think, wait a minute, maybe Trump is going to lose in 2020 and we're going to have massive tax hikes. People keep talking about whether these tax cuts are going to be permanent or not. No tax cuts are permanent, because any government can raise taxes anytime they want. And if we get a Democrat in the White House and Democrats controlling Congress, you better believe they're going to raise taxes. And they're going to have more regulation.